Hi everyone, today I'll be breaking down my recommendations about the top 3 Canadian dividend paying stocks to buy. Last week I recommended the best ETFs, but some people feel better with dividends and reinvesting and cash flow. So today I'm sticking with companies, and next week maybe I'll probably choose dividend ETFs since those are pretty popular. I actually have way too many to recommend, so maybe I'll do 2 separate videos breaking down into different sectors, or maybe growth as well. This video will be higher yield and maybe lower stock growth, and the next video will be lower yields, but that's only because the stocks I've been looking at have been shooting up so much. I've picked these 3 because of energy leadership in the first, financial stability and reliability in the second, and insurance presence for the third. I used to recommend Rogers, TELUS, and Bell. However, I just realized how poorly those companies have been doing. I have to do a video pretty soon on why the Canadian telecom companies are tanking and if it's a good time to buy, because I do think they'll rebound, it's just when. Before I get started, I've made a free ebook for you breaking down some Canadian finance and investing tips for beginners if you're interested. I'll leave a link if you want to sign up for some freebies, and I'll constantly be updating the ebook, and I'm obviously going to use your email to market my Canadian finance course, which includes a one-on-one 1-hour Zoom chat. But you know what's funny? Everyone purchasing the course, it never takes me up on the Zoom chat because they say the course already answered all their questions. So that's good, I guess. First recommendation is Enbridge. If you've been following this channel since 2020, I've recommended this a few times, and each passing year solidifies my choice. They've been doing well in terms of stock growth and dividend payment. They've been paying dividends for 69 years straight, soon to be 70, without missing a payment, not a single quarterly payment. They're currently trading around $60 per share. The ticker is ENB, but make sure you're looking at the TSX version and not buying the US version. It's the same ticker, but you'll notice the price is around $40 and it's in US dollars. The current yield is $6.05 per share and they pay quarterly, meaning if you've invested $10,000 in Enbridge, you'll get $605 per year or $151.25 per quarter. Enbridge currently does not have a DRIP-enabled or dividend reinvestment plan, but you can reinvest the dividends yourself. If you get paid in your RRSP or TFSA, you only need $60 to buy a share. So even a $5,000 investment will get you $75 per quarter, which is enough to buy another share of Enbridge every time you get paid. If you're not currently retired or don't need the cash flows, I always recommend to reinvest the dividends for the long term. Just think about it, a $10,000 investment in Enbridge 25 years ago would be worth more than $150,000 today with the dividends reinvested. $100,000 invested would be worth more than $1.5 million. The reason the stock is so good, not the good reason the stock is good, is because they increase the dividends as well almost every year. The 6% yield isn't forever. In 2024, they increased the dividend payout by 3.1%, just keeping up with inflation, but there's more room to grow. The current payout is $3.66 per share, but they make around $6.52 in cash flow per share, meaning they're not paying out more than they can afford. They can use the excess cash to reinvest and grow, and obviously grow the dividends in the future. Second on the list, again, maybe recommended 4 times already on the channel, but I'm quadrupling down. I'm recommending TD Bank. There's nothing wrong with the other banks. In fact, if you're looking at capital appreciation, the last 5 years have actually been great for CIBC, but I like TD's mix of Canadian and US exposure. TD remains a very profitable bank despite the challenges it's had in the last 2 years. The company will bring in a new CEO in 2025 to reset the growth strategy. So that's why I'm reinvesting in this, and that's why I'm hopeful. They're currently trading at $78 per share. They pay a quarterly dividend with an annual yield of 5.2%. So if you have $10,000 invested, you'll have $520 per year or $130 per month. If you're looking to reinvest the dividends into more shares, you'll need at least $6,100 invested, which is enough to get you 1 share per quarter. Looking at the 5-year chart, it hasn't been doing too well recently. It's actually hovering in price, which is not ideal if you bought it 5 years ago. They dropped in price actually after their last earnings release since profit margins were lower than previously reported. However, they are forecasting higher earnings in the future, so I'm anticipating the TD price to push back up into the 80s relatively soon, and maybe we can even rally back up to all-time highs of $108. Also, I'm recommending because of their dividend growth rate, the annual growth rate over the last 20 years has been 9.7%. Imagine if you've been reinvesting those dividends along with the increases over the last 20 years. Last recommendation. I think this is the first time I've recommended this one on the channel. I've wanted something different, maybe with a little higher share growth, but also with a good dividend. So I'm recommending Sun Life, an insurance company, ticker symbol SLF. They're currently trading at 85 per share. But if you take a look at the last 5 years, it's up 40% in just stock appreciation. They pay a quarterly dividend with an annual yield of $3.93. Investing $10,000 will get you $393 per year or $98.25 per quarter. If you want to enroll in a DRIP, you need at least $8,800 invested to earn enough to buy 1 share per quarter. I like this stock because they've been paying dividends for over 25 years, I believe, and they've been increasing for the last 10 years. Just take a look at the Sun Life website. You'll see the dividend history. They've been increasing the dividends 2 to 3 times per year, which is amazing. Not only are you getting capital appreciation of 40% over the last 5 years, but you would have had this rapidly increasing dividend. They're earning over $6 per share, and they're paying out just over $3 per share, leaving a lot of room for future growth, future reinvestment, and just maybe peace of mind to let you know that dividends are safe. I recommend everyone buy these 3 in your TFSA or RRSP first. Make sure all your income is tax sheltered. What's wrong with me today? I can't get my words right. Thanks for watching. I'll probably do a dividend ETFs next week, and then maybe a few videos on why the Canadian telecom companies are failing. I'll have to do my research on that. I was trying to recommend one of the 3 big telecom companies for this video, but I didn't realize how poorly they were doing. I haven't been monitoring them in 2024, but it's not looking good. So stay tuned for that one. Thanks for watching and tune in to the next one.